Welcome one, welcome all to the node. I am Mike, aka Veteran Crypto. Joining me shortly will be David. But this is your place for news, interviews, and education. So I want to stress education. We are not here to hype. We are not paid to talk about any projects positively or negatively. We are here to simply give out the information that we are able to find about these projects and paint the whole picture. If that hurts your feelings, sorry, not sorry. If you like what you hear, both negative and positive, if it helps you in some way, we appreciate the likes, the shares, and the subscribing or following. But we are not here to make to give you feel goods. We are here to educate, and we are here to be educated. So I learn from David all the time. Sometimes he learns from me. We want to learn from all of you out there. So if we get anything wrong when it comes to our deep dives or our analysis on these projects, please, I welcome anyone to contact us through direct messages in our Discord, on X, in the chat. All I ask is you cite your source. If you're saying that we're full of shit about something, cool. Just link or tell us where to find actual documentation that proves us wrong. Not your opinion, not rumor, not hearsay, not I heard once on a spaces. I want to see facts. That is what we base things off here, not emotion. I do not invest off emotion. So anyway, I just want to stress that I've been spending a lot of time on X lately, talking to people about Kita. That the Ketards are, and they call themselves that. And it's not a jab at them. They call themselves Ketards. Um, they have been up in arms because of the deep dive we did on Kita, and thankfully, we have one gentleman, Crux of Crypto. Hats off to him. I appreciate him. Nothing but respect. Is coming on Monday. This coming Monday, he's going to be on the show and says that he has alpha that shows that we were wrong about some things. I welcome that, and as long as he can show an official documentation and actually do a screen share and show us what it is that he feels shows that we're wrong, I'll change my tune on it if he can show where we're wrong. But again, nothing but respect for the guy. He reached out to us, said he was willing to come on. He has his own channel, great content, great production value. Guys made it, if he claims, and I don't disbelieve him, he's a fellow veteran. But he claims in the past cycles he's made a good amount of money. The problem that I have with past cycles is crypto has been purely speculative. Everything has been we're trying to build, we are talking about partnerships, we're in negotiations with, nothing up until recently has been, it's all been promises. It's all been smoke and mirrors. And it's kind of like the dot coms, initially, where anything with a dot com was having money thrown at it. That's basically what I equate to early crypto to. Is everything was it would pump off of good news and it would retrace. Buy the rumor, sell the news. I'm sure you've heard that before. We are moving out of a speculative market. We are moving into a utility market. Reason being is we are getting regulation. We are getting banks and institutions that are adopting this technology. Only real tech that solves real pain points is going to survive. All of these projects that claimed that they were going to, solve cross-border payments or whatever, they're going to go away if they don't start generating fees and revenue. If a business doesn't make money, a lot of these crypto projects, the only reason they're still afloat is they dump their token. They have to be able to pay people to keep the lights on so that they can, pay salaries, all of that. They have to generate revenue somehow. And if they're not doing it through fees and through generating revenue through products and services, they are going to go the way of the dodo. And we're already starting to see it. There's a lot of projects and protocols that are folding up shop. A lot of, the little bit of liquidity and the little bit of interest is being funneled towards solid projects. And you can see it in the analytics. You have an opportunity of a lifetime. The data is on chain. This is fully transparent. In the past, you had to have millions of dollars and be a large investment group to have access to the databases and the analytics that showed how liquidity was moving and dashboards and things like that. Let me see if this is David. I'm getting texts. He's usually here by now. Yeah, he's having technical difficulties. Had to restart his computer. All right. So I can't stress this enough. You can't have the old school investing mentality, and not to say that you can't make money off of speculative pumps, and dumps, if you're shorting. I am focusing on, and we are focusing here for the most part on long-term investments. It's why I'm so bullish on Canton. It's why I'm so bullish on Aerodrome. And not to say that they're a sure thing. I just see them as being more solid. I see Aerodrome is like 60% of the volume on Base. I see Aerodrome being integrated into Coinbase. I see institutions on this new platform. Institutions are going to be using it as a hub of liquidity. It's going multi-chain. I see big things. Same thing with Morpho. I don't like the tokenomics on Morpho, however. It's a perfect example. Ondo, super bullish on everything that they're doing. Chainlink, Wispy in the chat. Chainlink, super bullish on the services that they offer, the products and services they offer. However, what role does the token play in that? Because if there is no connection, and that's what we talk about here, value capture. Write that down. If a token does not have value capture, it is dog shit. Other than speculative buys and sells, that is the only thing that moves that token. Because if there isn't like hype, that the platform, the protocol, it has programmatic buybacks and burns. It makes it deflationary. That is the connection between the token hype and the success of the protocol. The fees that are generated burn the token, making it deflationary. It can work in reverse, however. If the volume moves to another protocol, hype can become inflationary and the price could dump. Canton, that I'm so bullish on, it is inflationary right now. There's more tokens, new tokens going out on the market than there is being burned by the fees, even though it's burning $2 to $3 million in fees a day. It's still inflationary. You have to take your emotion out of your investing. I cannot stress this enough. You have to look at data. You have to look at facts. David, what's up, brother?
No, not much. I've been working since 7, so I basically had an entire work day. It's just afternoon. I've noticed something funny. Sometimes when I'm making changes to my computer, it'll mess up my audio. That's what I was struggling to get working. The audio can get messed up. But what's going on with news? We got markets not looking too hot. I saw something interesting at the open. At the open today of the cash index, the S&P cash, everything dumped all at once. The NASDAQ was off 1,000 points at one point earlier today. The S&P was off. Bitcoin, Ethereum, even Micron, pulled back significantly after opening up. So everything dumped all at once. And, when you see stuff like that, especially at an all-time high, after a big earnings report, it looks like profit taking. It looks like rotation. And it's done by big players. And also, we got to think about there's over the next couple of days here, a quarter-end portfolio rebalancing. So there's a lot of supply for sale right now. A lot of
Sweet.
rotation.
Sorry, I got distracted for a second. We just got the email that my they sellers of that property they accepted our offer, so we're closing on it.
That's awesome, man.
Yep. So yeah, we're starting our adventure company. So we
Sweet.
talked about it last night. Me and his son, we're gonna start doing just basically like hunting guides, fishing guides, kayak tours, hiking and camping, survival skills, all that stuff, and just yeah, we're gonna start like an adventure company. So
That's awesome.
yeah, so
Yeah, man.
so yeah, no, pretty excited about it. So yeah, all right. So yeah, what I'm wanting to focus on with news, I don't want to kick everybody while they're down. Markets are sucking. I want to paint the picture of what is the future. We don't have a crystal ball. We don't know, which, necessarily which projects or protocols are going to be the cream that rises to the top. The Googles, the Amazons, the Microsofts. We don't know that, but if we can educate ourselves on what big money is doing, follow the money, then we can have a better understanding of what to look for in these projects and where to put our liquidity. So, with that being said, this is the institutional infrastructure shift. So while the market is distracted by short-term price action, the world's largest financial institutions are quietly completing the most significant infrastructure upgrade to the global financial system in decades. So major banks launched shared tokenized deposit network. In a landmark move, a consortium of the world's largest banks, including JP Morgan Chase, Citigroup, Bank of America, Wells Fargo, BNY Mellon, HSBC, and PNC, has announced a shared bank-led on-chain money initiative. This isn't an experimental sandbox project. It is a live effort to bridge on-chain activity with traditional payment rails. They are building a system to clear and settle tokenized commercial money or bank money at scale. By leveraging the security of regulated banks with the 24/7 programmable nature of blockchain, they are effectively turning the promise of DeFi into the standard of TradFi. So this is what we're seeing, and why I'm so bullish on Canton is we are seeing JP Morgan Chase, Wells Fargo, all those banks that we were mentioning. Most, if not all of them, are either live on Canton in some way or working to go live.
They are. I read something earlier today on X that there was some competitor to Canton that was actually built on Ethereum. I think it's called POC. I saw that yesterday and today. It's in my bookmarks here. Let me
see if you can look that up, because I'm always I always want to keep an eye out for something. I see way. It would have a lot to do to catch up. Just because of the amount of super validators, because these banks and institutions, to run on Canton, they have to buy large amounts of Canton and lock it to be a validator or super validator to run on the network. So that goes back to that value capture we're always talking about, where the token plays a pivotal role in the products and services being offered. Again, all of the fees that are paid to use the network, 100% of them are burned. That is programmed in. That is automatic. Unless there's a vote to change that, that is hardwired into the tokenomics and mechanics of Canton. It's I can go on and on. I won't, but I can go on and on why I'm so bullish on Canton and the token itself and the project.
Yeah, I'm bullish on Canton too. So I think let's see here. What is it called? There's something. I'm pretty sure it's on Ethereum. Having a difficult time finding it though. pretty sure it's called like POC or something like that.
Well, keep looking.
UBS.
I'll keep.
Yeah.
So it says tokenized deposits offer the benefits of digital payments, including programmability and interoperability, while preserving the essential role banks play in extending credit and supporting economic growth. I call bullshit on that because with DeFi, we can freaking actually earn on our deposits and take out loans against it. So banks they've kind of lost that footing. Uh, this offering supports the growing demand for tokenized deposits by combining the programmability of on-chain money with the trust, settlement certainty, and balance sheet benefits inherent to commercial bank money. Again, I call bullshit. I think that the banks are antiquated. The banking industry has long provided the trusted infrastructure that underpins the movement of money throughout the global economy. I think that they've basically taken advantage of us by having a monopoly on where we have to put our money, lending it out up to 40 times. For every dollar we put in, they lend it out up to 40 times, charge us 6-7% or more in interest, and give us nothing for it. So they basically use our liquidity, pay us nothing for it, and make a bunch of money off of us.
And we also don't own anything. Like the big difference is when you custody in your hardware wallet assets, digital assets, you own them. Yeah. But when you've got a deposit at a bank, you don't own anything.
Yeah.
You've got like a really weak claim on a liability on the bank's balance sheet. So big difference.
A lot of times they're investing in things like commercial real estate that hasn't been doing well, to stay solvent. And then when they fuck up, then they go to the government, and they're like, we're too big to fail. Give us bailout money, which is our tax dollars, and then they get that money and they pay it back with no interest. So okay, we're getting screwed twice. We're depositing.
Depends on the size of the bank. A lot of banks are just like allowed to fail.
Oh yeah, but the big ones that are doing the big gambles, they're the ones that are basically because they know that they're going to get bailed out because the government's not going to let them fail. Personally, I want to bail out the small banks and fuck off on the big banks.
Well, but the thing is, though, is that one of the biggest gambles the big banks made is on U.S. Treasuries, because that was what really started to blow up in 2023 in the spring. Because all of a sudden people started to worry about the fact that the unrealized losses on the treasury books and a lot of these banks are bigger than the market capitalizations of the banks. So they've been buying treasuries, because I guess that's what you do if you're a bank. Mm-hmm. And unrealized losses are a bitch, man. Good thing they don't have to mark that to market. I read, this was back in 2023, but I don't think anything's changed. I saw a chart of this just the other day that it looks like we're still sitting at the same levels where, remember back in 2023, Myke, that was the start of the last bull cycle. And, Charles Schwab and Bank of America and Citibank, and they had losses on their balance sheets, unrealized losses on their treasury books that were greater than the value of their businesses.
Yeah.
I'm pretty sure that's still the case. So I don't know. Does that matter anymore? Do people care about that? It's the type of thing where people don't care until all of a sudden they do, So I think that's kind of what's going on with this AI trade too. Micron reported some amazing earnings last night. I mean, just phenomenal, blew it out of the water. Micron just, they reported revenue that when NVIDIA had a quarter like that, NVIDIA ripped higher. Micron's like a $1 trillion corporation now. So there's been a lot of people speculating that, it might even go higher and higher from here. Just amazing financial results that they've been able to drive. And, for good reason too, because if you want to be able to run any of this AI, you need a ton of memory, man. And that shit is expensive because there's no one to manufacture it at the, at scale. So I don't know if you saw that Apple, they overnight raised prices on a bunch of their products because they have to, you know, because the memory components are much, much more expensive.
Oh
So,
yeah, I mean, if they want to stay profitable, and then they want to because I mean they have a fiduciary responsibility to stockholders. There is a value capture for stocks. There's a legal contract. Because it's a security. There's a legal contract between the company and stockholders that they have to do everything in their power to make stock price go up.
and speaking of security, so Mr. Sailor, Mr. Sailor,
Ah.
Sailor's getting sued, baby.
Oh, is he? Who's
Yeah,
suing him?
man.
Who's suing him?
Jewish lawyers, bro. He's fucked.
he's screwed.
Yeah,
Turn out the
yeah,
lights. Party's over.
yeah, yeah. I saw that today.
Oh no, fucking Jews.
I know they're gonna get all the money. And the
They
money.
want the money. Those that don't know, it's an inside joke. David has Jewish roots, and we always give him shit about it because he likes the money.
Yeah, man. Yeah, I like money. But I think Sailor, man, because his stretch product, bro, is yuck.
Yeah.
And
It's
MSTR.
like $75 last I looked earlier this morning.
I mean, I see it. It's 75. It looks like was the low, maybe. Oh, dude, 73.65 was the low. And MSTR is trading for $87. I thought MSTR was going to go to 50. That's what I was thinking. It would go to 50. And
I think it was Ben Cowan this morning I was listening to that was saying that he thinks he sees it going down there.
yeah, well, I mean, that's where the moving average support is that I see. So house flips. Why do you house flips? Do you own some stretch or some MicroStrategy, man? Oh man.
I bought some STRC at 85. I bought like $300, nothing crazy. But I'm just looking to, if Bitcoin, in October, if it starts taking off, as long as it doesn't go to zero, if Bitcoin starts taking off, then I think people are going to be, licking their lips at that 12%. And the potential for getting that upside. So if it goes down to like $60 or something like that, they'll be looking to get that 40% plus the 12% annual. So
For sure. I mean, look, if you think that stretch is going to regain its peg at 100, over the next 6 months or whatever, then I mean, you're basically buying $1 for 77 cents.
Exactly. That's the way I look at it. Is it a gamble? Is it is it a guarantee? Absolutely not. Is it a gamble? Absolutely. But that's what investing is. And the more risk you take, the more potential you have to gain.
Yeah, well, I mean, to the victor go the spoils, but you got to take risks to be able to get that reward, right?
Yeah. No, I mean that's why meme coins you can get 100 or 1,000x, and buy it.
Dude. Did you see Meme Core today? Or
No.
maybe it was last night. Remember we were looking at in the top 100 and there was that bullshit one called Meme Core. We never did deep dive on it. It just, dude, it dumped 80%, I think, overnight. And we're talking about like, it was like a, $10 billion, bullshit coin. Like, I don't know exactly what it did. I tried reading about it once on CoinMarketCap on the About page, and it basically said like, this is bullshit. Don't buy this, you dumbass. That's what fucking CoinMarketCap told me. It was something about like a meme coin launching protocol or something or other. Well, turns out, who would have thunk it? The meme coin protocol rugged. No way. Could never have seen that coming from a mile away. It's not like it's pump fun where it actually makes money. So yeah, that meme core thing, man, that was in the top 30, dude. I'm pretty sure it was in the top 30.
There's a lot of craziness. I mean, we're just going down like our deep dives today. We're just kind of going down the list. Like we're doing HBAR and Monero today.
So we're doing, HBAR is a complete dog shit. Like if a dog ate its own shit, that would be fucking, and then shit it out again. That's
and then another dog ate it and shit it out.
Oh man, yeah, that's just a big steaming pile right there.
Well,
you know,
and I want to keep stressing this. You know, we do not get paid in any way for anything that we say on this channel. To say
Mike, the rattle on your microphone when you,
you know, good or bad. You know, we don't get paid to talk about projects. All we do is we go out, we learn about the project, and we give the picture that we find, good and bad. What you do with that is up to you. If that hurts your feelings, that's on you. If you want to invest off your...
Do you need a ambulance?
Yeah. I mean, if you want to invest off of feelings, good luck with that.
Yeah, it's not going to work.
No, I prefer to do it off data. I prefer to do it off data. So, you know, and there's plenty of projects out there that are doing great things. Again.
Oh, yeah. Oh, yeah.
Chainlink is doing great things. Ondo, great things. That problem is the token plays little to no part in those products or services. So,
yeah,
that's what you need to understand. And what we're doing here is our mantra is value capture. You know, that is what we focus on here. What connection does the token have with the products and services, the fees and revenue that are generated, you know, to make the price of the token go up? Because otherwise, you are buying the jersey or the baseball card of your favorite project and just hoping that somebody else is going to come along and pay more for it than you did. That's really
right. Exactly. That's exactly right. I mean, look, you can like the tech, but that's completely different than having some solid tokenomics. So if you like the Ondo tech, great. Don't buy the token. Yeah. If you like, I mean, honestly, man, like in the top 100, probably maybe 10, 15 projects in the top 100 that like aren't bullshit, So yeah, well, tech and tokenomics are two different things.
Well, like XRP and Ripple. I mean, I had over 40,000 XRP, sold it at $2, with an average buy-in of 34 cents. Because with the launch of RLUSD, it changed, the thesis on it. I had to evolve, my thinking on it. And when I did that, I basically lost $2,500 because I tried to get into the Ripple IPO because I was bullish on what Ripple was trying to do at the time. I mean, this was, forever ago. And so I was trying to get some stock in Ripple because they were buying up.
Myke, you might want to don't tell anyone about that.
No, I'm fully transparent about my mistakes and my successes. I mean, that's why me and Jeff initially started, DeFi, crypto, and airdrops is to share our journey, good and bad. I'm not going to try to paint a picture that I'm some investing guru. I'm going to share the mistakes that I made. So I went to Link2. They declared bankruptcy, but I went to Link2. They had the Ripple pre-IPO that you could buy into. I bought into it. It was like $2,500, nothing crazy. But bought into it because, they were talking about doing an IPO. They were buying up banks. They were buying up, all these licenses, all around the globe to, basically become a bank. I wasn't bullish on XRP, but I was on Ripple. It's a perfect example. Ondo. There's a lot of these projects out there that are doing great things.
Honestly, like Myke, I don't know if I could even be bullish on Ripple because Ripple Labs. I mean, like even with like whatever companies they've been buying, I view that entire business as a horrible fraud. And I think that it's kind of like fruit of the poison tree.
You could be right.
Yeah, I mean, all I see is that they, basically have been funding operations by dumping their token. They have no product that makes any money. And I don't see them shipping anything. So I don't see how, you can't be bullish when they don't ship.
Well, like I said, this was like a year and a half ago or 2 years ago.
Well, yeah, but there's a lot of people now You
Oh
know,
no,
like
no, I wouldn't be buying Ripple stock right now.
no,
I
no,
mean,
no. But what I'm like, but there's so many of these, influencers out there on YouTube and X talking about like, stupid bullshit around XRP, and
yeah,
it's just like, dude, I wonder how much they get paid. I wonder if it's direct payments from Ripple Labs. Probably isn't. Or if they just talk about that stuff because they know that they get views off of it. And so
I
even
think
if
a lot of it is views,
you
and
think so,
I know that we could get a lot more views if we just talk bullish about everything, like most people do out there. Most of the channels, play off people's emotions, and you do you.
no way.
I'm not saying it's a bad thing. That's not us. We want to give you the full picture. We want you to be successful. If you watch, there's a lot of channels out there that just talk bullish about everything, and people buy into them, and then the market dumps and they sell at a loss and they call crypto a scam. We want to warn you, to help you avoid some of these bad projects, these bad tokens with bad tokenomics. Yeah, we're not going to give you the warm fuzzies here, but you have a much better chance of making money, listening to our show and knowing the full picture of these projects and the tokens and tokenomics and mechanics. Not to say it's a guarantee, but we're going to give you the full picture here. We're not
I don't
in.
know. I think that the shopping list that I've been putting together, man, is gonna print during the next ball.
I
So
I'm pretty confident in my portfolio as well. It's because we're focusing on value capture. We're investing in tokens that have a direct connection to the fees and revenue generated through programmatic buybacks and burns, through the burning of fees, through these different mechanics that are built in, that are automatic. There's no manual processes that they have to vote. Like the DAO has to vote to make it change it from a governance token to a utility token. And then what utility? If they do make it a utility token, is it is the utility that it takes like 0.00001 of that token to do a transaction, and it's going to take over 5,000 years for 10% or less of the supply to get burned. So in your lifetime, there's no way that enough of it's going to get burned to move the price at all. You need to understand these tokenomics at a deep level. Otherwise, you're just throwing money at the wall and hoping that some hype comes out to pump it, and then hopefully you're smart enough to sell and take some profits before it retraces. We
so
saw
you
it.
see what Zach Nasty said in the chat about SBF, Sam Bankman fraud.
Yeah,
So, dude, I got to give it to that guy though. He invested big
dude.
with stolen money. I mean, he stole his
Anthropic,
customers'
dude.
deposits.
If he wouldn't have stolen any money, if he just would have sat on his investments like Anthropic and shit.
Well, but I think what he did was he stole money from his customers to
Yeah,
make those investments. Like they turned out to be brilliant investments.
yeah,
Like, if basically if Binance hadn't, called his bluff and
yeah.
dumped his token and cratered his business, then maybe those bets could have panned out. But that guy
He was playing a shell game. I think he was playing a
dude.
shell game, and he got caught.
He was running the biggest, or like one of the biggest exchanges from, like, what was it, QuickBooks? Like from
Yeah,
QuickBooks, like on a laptop.
yeah. No, dude. And then he had that fucking weird chick that was like,
Oh my god, that chick,
yeah,
Alameda chick.
dude.
Yeah.
She's like, what was it? She was doing an interview and like was joking
And she
about
was like, "Well, what's a stop? We don't have
yeah,
those stop
we don't use
losses."
stops and like math.
No,
What
no,
like,
because she had God mode on their exchange. Like she literally couldn't get liquidated. So like it wasn't until the thing blew up and went to zero. Yeah, man. What else we got in the news? Let's get some
I was gonna
news.
I was gonna yell off some of this, some of these quotes from some of these CEOs and stuff of banks, but I don't like listening to what they say. I like watching what they do. All right, here we go. Let's do this. RWA tokenization hits institutional maturity. So we got a real world asset tokenization is moving past the experimental phase and into structural balance sheet integration. So these are some of the big moves. So like I said, I like watching what they do, not what they say. So JP Morgan recently launched the JLTXX, a $100 million tokenized money market fund on Ethereum. Fidelity International launched FILQ, its first tokenized dollar fund on Ethereum, utilizing Chainlink for real-time net asset value reporting. Amundi, with 2.4 trillion assets under management, launched the SAFO, which is the UCITS compliant tokenized fund on Solana. BlackRock continues to lead with its Biddle fund, now at 2.3 billion, settling the gold standard for institutional access to on-chain yield. So institutions are no longer just watching DeFi; they are actively deploying billions into these protocols, and this is what? Why am I like at a loss for the word? Regulations.
Billions. Clarity.
Yeah, this is pre-regulation. There's very little regulations in place, and they're finding ways to try to front run all this.
Mike, you think clarity is going to pass?
I don't know, dude.
Right? I don't know either.
It's getting slim.
Someone's boyfriend in prison.
Someone's boyfriend in prison.
Dude, have you seen that photo of him like standing like kind of in the background behind like those two jacked fucking dudes?
No.
And he's just standing there like, oh.
No, I haven't. Let's see.
Oh, man.
So Morgan Stanley, I guess they're betting big on hybrid wealth management. So it's aggressively pushing towards an institutional digital wallet expected to launch later this year. They aren't just creating a crypto wallet, they are building an interface that allows institutions to hold tokenized traditional investments alongside Bitcoin and Ethereum. This is the bridge that will finally allow wealth advisors and family offices to allocate to digital assets without ever leaving their familiar banking infrastructure. That's huge.
Oh, yeah.
This is the kind of thing that we're looking for. Anything that streamlines the ability for retail and institutions to onboard onto these digital rails and onto these protocols. It's why I'm so bullish on like things like Aerodrome, because of their connection with Coinbase and Morpho. Again, not bullish on Morpho the token per se. I have a small bag that I'm hoping to make some off of speculative pumps, but the tokenomics, not a huge fan. Aerodrome, however, I am, and I see the connection with Coinbase and the institutional plays that Coinbase and Aerodrome and Morpho are playing, to where there's some long-term upside to that. That is going to onboard. Coinbase is a huge onboarding on-ramp for retail, and it's starting to become one for institutions as well. So that's the kind of thing I'm looking for personally.
Yeah, I like Bitcoin. Bitcoin's good. I think we need some Bitcoin.
The problem I have getting too heavy into Bitcoin, and I at my own peril. I would be doing much better if I just would have aped into nothing but Bitcoin. But I just, until somebody starts building out meaningful DeFi, and that real value starts moving on that network, other than just being used as a store of value long term, I don't want to be too heavy into Bitcoin. That's just me. I'm not saying build your portfolio that way.
So that there is real value that exchanges hands on that network for sure. In fact, I think it's probably maybe outside of like Canton and as far as like transaction volume, I'm not quite sure, but yeah, definitely a lot of value exchanges on the Bitcoin layer one. You just got to believe, right? You got to have faith,
I
man.
believe I can fly.
Yeah, you just got to have faith, brother, you know?
Yeah, what was that? George Michael or something? You got to have faith, faith. All right. So, yeah, I own some Bitcoin, but just not. It's not a huge part of my portfolio. It's like I think fourth, like my fourth largest bag or something like that. And I'll continue to stack it, but yeah, I I just want. I want something that is providing, goods and services. Something that is, uh, that has, legs. It's something that isn't. Because one day everybody could wake up and just decide Bitcoin is valueless, and everybody could dump it. I mean, really, I mean that could happen. Same thing with if gold didn't have its uses, its physical uses. If everybody just decided, like they found some new element that was more rare, and they're like, oh, we don't need gold anymore.
That's
It's
definitely a possibility, Mike. I mean, look, you're not wrong. Like, definitely that is a possibility. But here's the thing, though, bro. I think that this next bull run, like, there's going to be some type of, there's always some type of crisis every couple of years.
yeah,
And it
yeah,
forces the Fed to step in and just print money. They've got one button, it's the print button.
yeah.
And so when we get that big print, dude, I think it'll probably be next year. Whatever the crisis is, who knows? But it's on this cadence. So next year, I think they cut rates and do the big print, and I think that Bitcoin ends up having what they call a God candle, where it's like
And
plus
it,
100K in a
and that
day.
is the equal possibility, and it's probably
Yeah,
more likely.
that's kind of what I think. Yeah,
And don't get me wrong, I don't think Bitcoin is going anywhere. I do think that long term it is a solid investment. It's just I'm looking for 10x's. I'm looking for 20x's. I'm looking to take my my 50, 60 grand and turn it into 600 grand, or 1.2 million, that I can DeFi safely, and earn like 12% or 20% on it relatively safely. Take some riskier plays, but for the most part stay pretty risk off, and just make 100 grand a year, just magic money. That's what I'm looking to do. So I'm playing it a little bit loose and fast.
I mean, I think that I've been thinking about portfolio structure. Like, how do I? Because I got my shopping list pretty well dialed in, except for the little small tidbits that I haven't quite lined up yet. The moonshot bag or whatever. But I've got my portfolio pretty much set. My shopping list where I want it. And so now I'm just thinking, like, how do I properly borrow against Bitcoin? Do I want to hold CBBTC? Do I want to hold WBTC? Do I want to hold spot Bitcoin? And then, how do I borrow against that? A couple of different ways to do that. Do I want to borrow against it at all? Maybe I don't want to use any leverage. But if I use leverage during this bear market, then all I got to do is, sit back and, basically do nothing for the next couple of years. So I'm just thinking, like, I want to be mostly in Bitcoin because it is fundamentally different than every other digital asset. Fundamentally different. There's no Bitcoin Foundation putting out fucking hentai porn manifestos.
Yeah.
So, like, there's no fucking Bitcoin Buterin going out there, wearing gray sweatpants with a boner next to some ugly Chinese chick. Like, there's none of that shit. You don't have the embarrassments that you've got with Ethereum. So
that's kind of one of the benefits to not having a face, kind of a mascot. With Bitcoin, you have Satoshi, but it's just this faceless, nameless, basic. I mean, it could be an individual, could be a guy, could be a girl,
CIA.
People.
It was CIA, bro.
Could be the CIA.
Yeah, it was NSA, CIA, DEA.
There's some evidence that points to that.
It was all of them together, man. It must have been. or it was just one brilliant individual.
And there's kind of evidence that points in a lot of different directions on that. But all right. That being said, let's UBS and Nethermind compliance at the protocol layer.
That's it. That was the article that I was looking for about some competing thing.
Okay.
Competing with Canton.
All right. Well, let's look at this. So UBS and Nethermind have successfully tested Ethereum for regulated banking applications. They proved that you can enforce strict banking compliance requirements at the infrastructure layer without altering the underlying Ethereum protocol. This confirms that the most regulated entities in the world can safely operate on public, neutral blockchain networks. So let's actually take a look at the news article and dig into this. So let's go to here and add David. All right. So UBS has completed 2 pilot projects with blockchain specialist Nethermind that demonstrate how the public Ethereum network. Okay, we already read that. According to the 2 partners, the project represents an important milestone in making public blockchain infrastructure more accessible to heavily regulated banks and financial organizations. At the heart of the initiative was the question of how compliance requirements can be enforced without altering the underlying Ethereum protocol. The tests demonstrate that banks can implement compliance controls through the systems that they operate on top of Ethereum while preserving the openness and neutrality of the network itself. This approach maintains compatibility with the broader Ethereum ecosystem while addressing the regulatory expectations of large financial institutions. And with Ethereum later on this year, again, taking emotion out of it, I'm very bullish on Canton, but Ethereum is supposed to be adding a privacy layer. So that would add the privacy that these institutions, want. So first, they configured an Ethereum node to apply customizable compliance and risk controls, including restrictions that limit transactions to pre-approved wallet addresses and block certain smart contract interactions. Second, they developed a component that routes approved transaction bundles through relay services directly to selected builders, ensuring reliable inclusion on the blockchain. The tests were conducted on Ethereum's Sepolia test network. According to the companies, compliant transactions were consistently processed and recorded on the blockchain. No live client transactions were involved. So they're focusing on tokenized assets. The proofs of concept demonstrated that institutional grade controls and interoperability with public blockchain networks can coexist without compromising Ethereum's openness and neutrality. Nethermind also described the collaboration as a significant milestone. The results show that institutional requirements can be implemented at the infrastructure layer without restricting the openness or interoperability of the network. That's pretty much it. It kind of keeps saying the same thing over and over in different ways. But they've just done a test, and I would want to do a deep dive on it to see, what the actual, architecture is, what it is that it's actually going to be able to accomplish, before we could do an apples to apples comparison with something like Canton. Not to take anything away from it. It could end up being better than Canton. And, if it has a token, obviously when we want to look at the tokenomics and see if there's, any way that, if we buy the token that we have some sort of, skin in the game, to where if it is successful, that potentially the price of the token will go up and we can, share in those fees and revenue.
Yeah, well, that would be for the Ethereum token. My sense from what UBS and Nethermind announced is that it's kind of like, it was a pilot. It looks like something maybe kind of sort of in the works. A little bit different than Canton, which is real legit driving revenues right now today. So it looks like okay, great. If if UBS is able to run institutional DeFi on a public chain like Ethereum, I think that's nothing but good news. So I'm all for it. Let's see what else we got going on here in the news, Mike.
What's that?
What else we got going on here in the news?
Hold on one second.
Oh, all righty.
All right. Let's see. What else do we have? You know what? Let's go over here. Let's go. Let's go through some of X. All right. So, ran across this. Had a connection with Aerodrome. So it says liquidity is not a product feature; it's infrastructure, and we built ours into the protocol itself. Every raise on Vibestarter ends the same way. The moment it finalizes, the project's liquidity is deployed on Aerodrome in a single transaction. There is no manual listing step and no pool that opens at the wrong price for someone to snipe. We could only build it this way because of Aerodrome's groundbreaking tech, which is what takes a project from funded to liquid atomically on base. Aerodrome's unique incentive model rewards liquidity that sticks, which is how we think about funding itself. Every token raised through Vibestarter launches its liquidity there, and Vibes lives there too. So I believe this is talking about the launchpad on Aerodrome.
Shaking my head here, bro.
I get it, but again, I'm gonna, kind of
launching memes on Aerodrome now. Is that what we're doing here?
It doesn't. I don't think it says anything about.
I mean, if you're launching a token, if it's just a launch pad, kind of reminds me of meme coin vibes.
T Rise was, it was launched on Aerodrome's launchpad. That's not a meme.
I think maybe what they did is they initialized a liquidity pool there. Was it launched directly on the launchpad?
Launchpad, because I voted. I used some of my locks to vote for it and got some of the incentive airdrop from it.
Right. I don't know. It's definitely worth looking into. But
I know nothing about this. I ran across this post, thought I would share it. Maybe we can do a deep dive on it.
So you know what I think Aerodrome is becoming? Aerodrome is kind of becoming like what BNB is to Binance. So BNB chain, like the base chain plus Aerodrome is to Coinbase as BNB chain plus, Jupiter plus Radium. Well, maybe not Jupiter and Radium, that's Solana. But, BNB chain is to Binance as Aerodrome on base is to Coinbase, I think. So I think that it's all the same types of products. On the BNB chain, you've got all these launch pads for meme coins. Binance does the same thing. And it looks like Aerodrome is starting to perform the exact same functions but on the base chain for Coinbase.
Yeah.
So, a similar product suite, very similar, I think.
Yeah. So I just want to point out, people are starting to wake up. This guy, Nick, I actually gave him a follow. He said he converted all of his Ondo to Aero on June 15th. Very happy with that decision. So, when Ondo was doing this parabolic pump and Ondo was being hyped, we had done a deep dive on it and basically saying that, that the tokenomics sucked on it because it's basically just a governance token. It just allows you to vote. And the Ondo Finance owns most of the vote. So all during this pump, I was on X telling people take profits, take profits, take profits, take profits, and then we saw this topping candle that David always talks about, and I was telling people hope you took profits, and it started dumping, and it's done nothing but trend down ever since. And it looks like I'm not saying that he listened to us, but obviously he saw something, sold his Ondo bag. I sold my Ondo bag, when it was pumping. But Aerodrome. Aerodrome has been very resilient. The new token and the new platform is launching next month. A lot of changes coming. Still a lot of unknowns. I'm not saying go and ape into Arrow, but it is looking promising. It's going multi-chain. A lot of cool UX UI upgrades. The tokenomics are changing. The locks are becoming stakes. There's a lot of what I see is bullish. Do your own research, but what I see is bullish. So people are starting to wake up to poor tokenomics and moving towards projects that they see as having stronger tokenomics. What's your thoughts, David?
Uh, Arrow good, I guess.
Well, Arrow better than Ondo.
Yeah, yeah. I mean, Ondo's dog shit. Arrow's not much better in its current iteration, but I think that it has an opportunity to become much, much better and very, very soon. So I'm really interested to see what these new tokenomics look like.
Yeah.
Because that's really going to be like the thing, right? If that turns out to be a hit, then hey, everyone walks off into the sunset holding hands and singing Kumbaya, and bags pump and things are good. But there was that one news article, Myke, that I think I posted in the Discord earlier today. It was about Grayscale talking about revenue for these. What's the definition of is like? I don't understand how even Grayscale can misunderstand the difference between fees that are generated as a result of token swapping in the liquidity pool and protocol revenue. Because that's, for me anyway, that's like the big sticking point is, those two things are not the same. So, when you take a look at all of these dexes, Uniswap, PancakeSwap, Aerodrome, Radium, if people are generating, fees in liquidity pools, that's not protocol revenue. Not in the same way that when you trade on Hyperliquid and, fees are generated as a result of your trading, that those fees, that's direct protocol revenue. Myke, what you got going on there, man?
Oh, just I got messages coming in. So I got my brother messaging about the property. I got my girl. She's messaging me, and then I'm watching alerts on the markets and stuff like that. So yeah, whenever I'm always listening to what you're saying. I'm just freaking trying to keep my finger on the
Well,
pulse.
I mean, so you see what Wispy's saying in the chat, the revenue topic. I mean, look, this is super important, because if I'm Hyperliquid and I charge my clients a fee to use my service, that's cash, that's revenue.
Yeah.
But if I'm Uniswap and users deposit assets in a pool, and that pool generates trading fees, that's not my protocol revenue. Those two things are different. So I don't really have a super deep understanding of many of the other protocols that were mentioned in that Grayscale note, but there were a lot of them. Like Pump Fund. I don't know how does Pump Fund generate revenue, because that could be just like an excellent business. I don't know. Haven't done the reresearch on it. Well, there's like a trading card one too.
Well, and that's something that we discussed is the very different mechanics and tokenomics that each of these projects have make it very difficult to use traditional traditional definitions for revenue and things like that. I mean, there's some things that that you can, but it's just it makes it really hard to have, because before you can have an in-depth discussion or debate on some of the stuff, like me and David tried to do it the other day, with top line and revenue and all these different things, and really trying to establish a baseline of words and their definitions as it pertains to this very unique topic of these protocols and crypto. And you have to have that before you can have the debate because if you're going to be using words, you have to agree on the meanings of those words. Otherwise, you're just going to go round and round. It's and I was very loosely using the example of what's the definition of a woman. If you're trying to debate the biologically the science of what's a woman and somebody that feels like a woman, you're just going to go round and round all day long. You're never going to be able to get to the root of it. So that's kind of why we're always, and I think regulation is going to play a big part in this, because we're seeing that a lot of these protocols and a lot of these projects are being forced to restructure. I mean, we're seeing it with Aerodrome. They're the way that they are going from that VE model, with the locks, to the staking, because of the verbiage. Regulation is going to have use certain verbiage and certain definitions where they're probably going to allow staking, but they're not going to allow locks. They're trying to align, because I mean you're delusional if you don't think that Coinbase, Aerodrome, all these, Canton, all of these, projects that are wanting to be part of the future financial system in the U.S., in Europe and places like this. If you don't think that they have people on the inside, or they're actually sitting at the table, listening to the debates and discussions and drafting the legislation and assisting in that, I don't know what to tell you. These are the ones that I'm investing in, the ones that have a seat at the table. So,
who's got the biggest seat, though?
Well, obviously, Coinbase and Brian Armstrong has a lot of influence.
I don't know. I think Mr. Jamie Dimon, has probably the biggest seat at that table, wherever that table is.
He's had a seat at that table for a long time. I'm talking about new participants, that are, at that table. And that's Brian Armstrong at Coinbase. We saw how much he was influencing, the votes and stuff like that on the Clarity Act. Then, you got, I've even seen Plume, the Plume team, they've been in Washington, D.C., sitting down with legislators, teaching them about tokenization and DeFi, because they're trying to be the purpose-built chain for tokenization. If they pull it off, that's another story. I have a bag of Plume, and it's one of my long shots, but it's a long shot. You got Canton, that's obviously has a seat at the table. They're right here, this news, the DTCC and Canton Network. I mean, this is old news, but this is a reminder. In only 18 days, July 13th, the DTCC's tokenization service start limited production trades on Canton. The new financial rail is loading. Are you ready? So this is going to be more volume and more fees on the Canton network. And those fees, 100% of those fees are automatically burned. So this could push it closer to that equilibrium, towards that, flipping from being inflationary to deflationary. And potentially, not guaranteed, again, we are very logical and reasoned here, it could make the price of the token go up and potentially skyrocket.
I think so.
So
yeah,
that's my 2 cents. I mean, you got any closing thoughts on the news, David, before we go into the deep dives?
Yeah. So I saw this one article earlier today from a guy, DeFi Warhol, and he was basically just talking about all of the different chains that are very likely to shut down this year, or at high risk of shutting down this year, or medium risk of shutting down this year. Some at lower risk, but still at risk of shutting down.
There's a lot.
Dude, I'm just running through the list. It looks like there's several dozen. Sure. Yeah, this is kind of bad news for anyone who holds these coins. Let me see if I can just grab this link and pop.
And I'm going to stress again, we are not here to protect your feelings. We're here to protect your portfolio. So, what you do with the information we put out here is up to you. We're not influencers. We're here to give you the information. What you do with it is 100% up to you.
And definitely not financial advice in any way, shape, or form. Just just a guy talking about stuff.
Who likes money?
Money's
Just a
good.
guy who likes money.
Check this out, Mike. Here it is. Check it out. So here's this is DeFi Warhol.
Can you
Let me see if
zoom
I
in a little bit?
let me see if I can zoom in there, and maybe if I go like that,
There you
a
go.
little bit better.
Yeah, that's better.
Okay, so check this out. List of chains that are probably fucked. Probably all of the chains on this list are fucked.
F-U-K-T, fuck.
Yeah, fucked, fucked. So it's Beam. You remember Beam? Beam is like two. I think this is 2 cycles in for Beam. There was a Beam pump last like 2024-ish time frame. But it's a gaming-focused chain that doesn't have any games.
It's a gaming-focused chain that doesn't have any games. Yeah,
what the fuck?
It's like on dodgeball, where a boy's like that. What was it he said? He's like, that's an interesting strategy, Cotton. Let's see how it works out for him.
Yeah, messing around, man. They're not finding out. Somnia Network. Haven't even heard of this one. Layer 1 with no apps. That one's dead. Zeta Chain. Didn't this one, have some type of problem with Circle recently or something like that? It's a layer 1 with no users.
I vaguely remember. I think Jeff might have talked about that one like early on, possibly.
Yeah, well, a layer 1 with no users does not work. We got Eclipse. So whenever you see something that dies after a token generation event, that's just insiders getting out. So yeah, Eclipse goes to 0. Oh my God, remember Mode Network? Mode. So just another layer 2 with no revenue and no dApps.
Yeah.
So bye-bye. Now here's the high risk of going to 0 this year chains. Initia. Yeah, I've never heard of Initia. What the hell is Initia?
Never heard.
Me neither. Okay. And then we got Ape Chain.
Is that part of the Bored Ape Club?
It could be.
Yeah, it is. It powers the ApeCoin ecosystem.
Yeah,
those that don't remember, like last bull cycle at the end of it, Bored Ape Club, it was one of those NFT, freaking cartoon monkey that people were paying like millions of dollars for one of them, and now they're worth like 10 grand or something like that, which is I think is still ridiculous.
Yeah, it's still crazy that they're worth anything. We're talking about JPEGs hosted on Amazon. It's craziness.
I knew nothing about crypto, and I was just like, what in the hell?
Yeah, seriously, man. So Ape Chain looks like it could go bye-bye. Fuel Network. I heard of this like once or twice, but that's going away.
I remember Ronin. I think me and Jeff did a deep dive on Ronin.
Manta. Yeah. I know Manta. I know Ronin. Yeah. Yeah, Manta, Ronin looks like they're going away. Medium.
We've talked about Barachain a bunch.
Blast. Oh, dude. Yeah, Barachain, Blast. Yeah.
I think Blast was actually one of the chains, and I could be wrong, but I think it's one of the chains that Aerodrome was going to add into its multi-chain roster.
Well, so wait, which one's adding Barachain?
No, not Barachain, Blast. I think, and again, I could be wrong. I vaguely remember the list that we went over that Aerodrome was going to use when they went multi-chain, and for some reason, I feel like Blast was one of them.
Yeah. So mercenary liquidity, that would be in keeping with Aerodrome. So you got C tier, Multiverse X. So I kind of remember this. Wasn't this like, something to do with like the Bitcoin? Yeah, or whatever, bye-bye. No, dude, Osmosis. Osmosis was kind of cool at one point, but no longer. Flow blockchains going bye-bye, it looks like. ZK Sync, man. This one's got no users. Scroll. So Scroll Network. Yeah, Scroll's going away, it looks like. Cello. I actually met the guy who founded this thing and built this thing in 2020 at a hackathon in Berkeley. He sponsored a hackathon that I placed 8th in. And D tier, likely to survive, it says abstract chain. But I mean, have you ever heard of abstract chain? Remember Sonium when people were talking about the Sony chain?
Yep. It's like, isn't that like Sonic or something like that?
Well, so Sonic is a whole separate deal. And that one, probably goes to 0 too.
That one's hurting.
Yeah, you got Saga, and then Tezos. So, Mike, didn't Tezos XTZ make it onto the SEC CFTC Sweet 16 list somehow?
I think it did.
I think it did. I might be wrong about that, but I think it did.
That whole list was shit.
Oh, dude, made no sense.
List, but like 95% of it was. I mean, you had fucking Algorand and XLM, and I mean it was basically a bunch of freaking it was all the ISO, the usual suspects with the ISO tokens.
Yeah, exactly. And I've never. I think this is a relatively old one, but I don't know what it does. So, like, no one uses it for anything. So yeah, looks like a lot of these protocols are going by the wayside. So let's take a look here. Let's hop in and run through some of that deep dive research now. Let me go ahead and share my screen here. We're going to take a look in the Node.pro at the Intel library. And let's take a look what we have today. We've got Monero and we've got HBAR. Let's take a look at HBAR first, Hedera hash graph. And then to wrap things up today, we're going to take a look at Monero. So let me go ahead and
At peak capacity, modern global enterprise-grade networks process hundreds of thousands of complex data inputs every single second. By mid-2026, the operational reality of the Hedera Hashgraph network reflects exactly this scale. Driven by integrations with Fortune 500 multinationals, the protocol actively manages massive daily transaction volumes that dwarf its Layer 1 competitors. This throughput is backed by top-tier institutional legitimacy. Both the SEC and CFTC have explicitly classified the native HBAR token as a digital commodity. Wall Street has also secured a foothold. The Canary Capital Spot HBAR ETF, trading under the ticker HBR, has successfully locked up 549 million HBAR in physical grantor trust custody since late 2025. But this chart shows a stark discrepancy. The left axis displays the exponential growth of Hedera's daily transactions per second. The right axis maps the token's market valuation. Despite handling more throughput than major competitors combined, HBAR's price action remains tightly range-bound between 7 and 14 cents. This divergence points to a specific architectural trade-off. To secure integration with global enterprises, the protocol was designed with mechanisms that intentionally neutralize traditional crypto value capture models. HBAR's tightly range-bound price reflects a perfectly executed, closed-loop grant economy designed to insulate corporations from open market volatility. The foundation of Hedera's throughput relies on the leaderless Hashgraph consensus algorithm. Instead of a sequential blockchain, it utilizes a directed acyclic graph, or DAG. Nodes continuously exchange signed payloads and historical hashes through a gossip about gossip protocol. By executing consensus calculations on local copies of the DAG via virtual voting, the network achieves asynchronous Byzantine fault tolerance without the bandwidth drag of multi-round messaging. Historically, data ingestion created a bottleneck. Mirror nodes, which provide developer APIs without participating in consensus, had to parse historical data from large, centralized cloud repositories. This schematic illustrates the June 2026 mainnet deployment of consensus node version v074. The monolithic cloud server is removed, replaced by a decentralized ring of block nodes. Mirror nodes now bypass the cloud, subscribing directly to these block nodes for real-time, low-latency data streams. This upgrade removes the centralized maintenance burden and future-proofs the network for horizontal state sharding and vertical execution scaling. While Hedera currently enforces a governed throttle of 10,000 TPS to prevent state bloat, internal research and development under Project Full Send has tested vertical
Project Full
optimizations capable of
Send.
pushing those limits significantly higher. By eliminating cloud storage bottlenecks, the V0.74 infrastructure completes the exact pipeline required to process continuous Fortune 500 data streams at scale. Processing corporate data at scale requires predictable costs. The primary hurdle for corporate Web3 adoption is the total unpredictability of fluctuating network gas fees. Hedera resolves this volatility through a distinct pricing mechanism. Transaction fees are structurally pegged to the US dollar, but users pay that exact dollar value dynamically in HBAR at the moment of execution.
Here's where
This
the
structure was
problems come in.
formalized in May 2026 under the simple fees model, introduced in the V0.73 release via HIP 1261. The transaction fee equals a flat base charge plus variable surcharges for extra signatures, gas, or bytes. To maintain the fiat peg, an oracle constantly updates the exchange rate. If HBAR's price rises, the network programmatically requires fewer tokens per transaction. This creates a direct economic friction point for the token.
Right.
If the secondary market value of HBAR doubles, the physical amount of HBAR required to pay
Let's
for
stop
any
it real
given
quick.
transfer drops by exactly 50%.
This is so important.
Yeah, it is.
So this isn't fun. I cannot stress this enough. This is fundamentally part of the tokenomics and mechanics of this project. What it's saying here, and again, I'm not trying to insult anybody, but basically, and correct me if I'm wrong, David, what I'm understanding here and what I've understood about HBAR and why I sold it is that it is built in to not allow or need the token value to go up, because if it does, then it basically adjusts the fees so that it counteracts the price going up, is my understanding.
You could think of this as the anti-number go up coin.
Yeah. No, it's mechanically built in to prevent the coin from going up so that there's predictable fees.
Yeah. So what is it that people were excited about with this one? Like
they were excited about all of these projects is everything was pure speculation. People did not, and myself included, did not understand, other than that the token was used for gas. And they saw Ethereum and they were like, oh, Ethereum price go up, Ethereum's a gas token, then these will go up, because they're a gas token. That's just kind of what people assumed. And then they saw bullish news and they're like, oh, all these different institutions are thinking about using them, and they're, in talks, and they're doing MOUs and, all of these things. And
my favorite is the in talks.
Yeah.
Or the partnerships.
But that's what everything was up until somewhat recently. Was everything was talks, because nobody real was launching anything for any real network usage. So back when last bull market, everything was pumping off of speculation and bullish news, not actual network usage.
Mike, one of my favorite types of scams that these protocols would run is they would use Google Workspace for their email, and then they would say in partnership with Google.
Yeah. That's what Kita, the keytards have been trying to paint, is an ex-CEO of Google, invested like $20 million in the project. And again, not that, Kita, the product, what they're building, it looks to be a solid, product. Over in the UAE, like the royal family over there, they just signed an agreement with them to where they're going to be putting all their commodities, on the Kita network. That's great for the Kita network. That's great for that ex-CEO that, invested $20 million in the company, not the token. But what part does the token play in that? It's a cheap gas token, and all the keytards have been up in arms and coming at me with pitchforks and torches, saying that, well, it's required to use the network. People to use the network, they have to, lock, large amounts of it. And I'm like, okay, show me where it says that in the official documentation. And not a single one of them can, give me a link. They just, throw insults. One guy, tried to say, well, Ty, the founder, said it on a Spaces once. And I'm like, so you're buying a token based off something he casually said on a Spaces? Nowhere in
Well, I
their
mean, but Spaces, that's the best way to disseminate information. That is the goal. I don't know what you're talking about, Mike. The Spaces, that's up here, man, all the way up here. It's just above CNN. So.
But it's. Can I be wrong? Yeah, absolutely. But if that was the case, if it was required to use the network, don't you think they would put it in their official documentation? Don't you think there would be some record of it? There isn't.
Yeah,
I've poured over everything. I've poured over their manifesto. I've poured over their white paper. I've done it manually. I've done it through AI. We did the deep dive. We've looked at it from every angle. I'm really looking forward to Monday, Crux of Crypto coming on and maybe showing us something that I wasn't able to find. I really am open to new information, but it needs to be factual. It needs to be cited. I don't care what somebody, thinks or feels or might have said casually on a Spaces that they're thinking about doing. I want to know that if I'm investing in a token, I'm investing in the current state.
You got to prove it. I'm all about verify, don't trust. In this space, you can't trust anything. There's no such thing as trust me, bro. That can't exist anymore. It has to be, verifiable. And look, the beauty of blockchain is that you can verify stuff on chain. Like, if someone wants to prove their performance, you can easily prove it very easily, especially now with these AI models, how good they are. If you give me a hash, I can go back through and find the performance of a wallet. So if you've been running a particular strategy out of your wallet or out of a wallet, period, or out of a bunch of wallets, give me a couple of addresses and I'll be able to tell you your performance. And it's like, okay, so now there's no excuse for people to say, oh, well, yeah, I couldn't really track it. So I think that, providing liquidity, I made 5% per month. It's like, no, bullshit. You didn't. You're lying.
I just had an idea. Had an idea. And I mean, obviously it's something that, I'd need your help with, but build an AI out to where we can load in a database of like founders wallets and VC wallets and stuff like that on these projects. And that tracks when they're dumping on retail,
or when they're buying, they're buying too, both.
Yeah. And so basically, because there was rumors and there were some people that were posting some stuff that was showing that like Ondo, when it was pumping, they were saying that the Ondo Finance was dumping their tokens into that pump.
It wouldn't surprise me. I did hear that too. But it would
be cool to have like a dashboard to where people could, verify that. They could look at it and be like, yep, that wallet is actively freaking moving, freaking tokens to exchanges. They're actively, selling, they got, freaking limit orders in, whatever.
Basically what we would need to do with that is just, call Arkham. Call the Arkham API. I'm sure they've got an API. That would be the way to build that, because Arkham is very, very good at putting together and doxing wallets like that. So that would probably be the most straightforward way to do that. But
it'd be something that'd be interesting. But sorry.
Oh, me too. Yeah, no, I'd be interested in that for sure.
Under the simple fees model, HBAR functions as a utility coupon. Increases in transaction volume do not result in proportional upward pressure on the token's price,
See that?
breaking the linear correlation between network usage and asset scarcity. The vast majority of Hedera's 10,000 TPS throttle is consumed by two specific enterprise applications: Avery Dennison's supply chain tracker app.
Okay, this is where things just get infuriating because people talk about transaction volumes a lot. And when you've got a real window into exactly where the transaction volume is coming from, and it turns out it's two businesses for Hedera Hashgraph, it's like, dude, it's so misleading. So yeah.
Ma.io and the Hyundai and Kia CO2 emission monitoring system. To fund the millions of daily operations required for these platforms, neither Avery Dennison nor Hyundai acquire HBAR on the open spot market.
Right. They got gifted a bunch of HBAR.
Yeah.
Just like, what the fuck, man? Like, you talk about, and all of the marketing that has been put out around Hedera Hashgraph and HBAR over the last, since 2024, really? Like end 2023, like beginning 2024. All of the marketing, just misleading. Like, I don't know if I never consumed any of this stuff myself because like immediately upon seeing it, it just screamed scam to me. Yeah, super misleading. A lot of people lost a ton of money on this thing.
Instead, these high-volume transactions are entirely subsidized by massive token grants awarded directly by the HBAR Foundation. Tokens are pooled from the Foundation grant, pass through the Atma.io wallet, and route to the fee collection account. Every 24 hours, fees are swept, 80% to the network treasury, 10% to staking rewards, and 10% to node rewards.
So this is like, the ultimate circular logic right here. So HBAR gives tokens to Atma, which then gives to 80% of that back to the treasury, which goes back to the foundation. So like, this is like, there's no value created here. This is just a fugazi, like a straight up fugazi.
And that's what we've been pointing out about 95% of these crypto projects is basically these tokens are bootstrap liquidity for them to try to build out, these businesses. And there's no way that we, the token holders, benefit if they're successful.
So Mike, what's the opposite of a fugazi? You know what we've got to do? You know how on some shows they've got like, like little memes that you can play, like that will pop up on the screen for the viewer as the viewer is watching it, or like, little pieces of audio that you can play, I want to have something where we can label projects fugazi, or what's the opposite of a fugazi? Like what's something super legit? What's the name for that? Think about that. I want to be able to stamp projects fugazi or not.
We can contrast this routing mechanism with Ethereum's post-EIP 1559 model. Ethereum programmatically burns its base transaction fee in ETH. As traffic rises, supply is actively destroyed. Hedera has no native protocol-level deflationary burn mechanism. When HBAR is spent, it is simply recycled into the governing treasury to fund operational expenses and underwrite future corporate grants. While the treasury has occasionally executed discretionary buybacks, these are manual capital allocations, not automated economic features of the ledger. The high transaction volume on Hedera represents a circular loop. It generates immense on-chain data metrics, but it completely bypasses the public spot market, extracting zero liquidity from retail exchanges. This structural control extends into the network's security layer. Hedera operates on a permissioned validator set of up to 39 governing council members. Retail participants do not run their own independent nodes. Instead, they engage in proxy staking, directly delegating their token weight to the council. This staking is engineered with minimal friction. There are zero lockup periods, meaning staked balances remain fully liquid, and delegators face no risk of token slashing. However, to maintain economic sustainability, the governing council algorithmically restricts the amount of value retail stakers can capture from network fees. The first programmatic control lies inside the staking reward account. To activate the maximum reward rate of 2.5% APR, this account must maintain
maximum reward rate of 2.5% APR. Damn.
Nice.
Big balling over there on HBAR.
a liquid balance exceeding 85 million HBAR.
Oh man, you only need 85 million H bar to earn that juicy 2.5%. Wow. That must mean that this thing never goes down.
Sorry, I'm a little bit distracted. I'm trying to dive into. I was bullish on Casper forever ago, and Casper Labs, Prove AI, left Casper Network and moved to HBAR. And supposedly they were in a partnership with IBM, as part of their, proving AI, or validating AI data and stuff like that. And so I'm looking to see where they are with that. So anyway,
yeah. Well, I think if you're jumping ship, moving to HBAR, then I think that probably tells you about all you need to know. You know what I mean?
No. It's basically what I'm wanting to see is did they ever do anything? Did they ever launch a product that is actually used on HBAR? And I'm not seeing anything where they're live.
No, I think probably just some type of value extraction maneuver.
Yeah.
Second control is the 13% reward emission cap. The maximum 2.5% reward rate only applies to a capped staking volume of 6.5 billion HBAR. If the total volume of staked tokens doubles, the algorithm automatically slashes the effective yield down to 1.25%. The consensus nodes themselves are also regulated. To distribute full rewards to their delegators, a council node must maintain a minimum stake threshold of 250 million HBAR. The tokenomics of the network are heavily and mathematically constrained. The network programmatically guards its treasury against infinite retail yield, enforcing a strict mathematical ceiling on how much value can flow outward. Evaluating Hedera requires looking at the pressure building beneath a highly regulated surface. By mid-2026, roughly 85% of the total 50 billion hard cap is circulating. The aggressive token release schedule that created a supply overhang in the network's early years is largely concluded. The Canary Capital HBR ETF provides further stabilization. By holding 1.3% of the circulating supply, the trust absorbs spot market inventory, creating a reliable soft floor for the asset. But the ETF utilizes an open redemption structure. Those tokens are temporarily held in custody, not permanently burned from the supply. Hedera's current state is a technical triumph, but an economic illusion. The network has successfully optimized its architecture to onboard Fortune 500 enterprises, prioritizing absolute corporate stability over retail price discovery. A structural shift in valuation requires a specific catalyst: the eventual exhaustion and expiration of the Hedera Foundation's treasury grants. True open market demand will only materialize when enterprises are forced to transition to organic, pay-as-you-go models. These corporations will need to source HBAR directly or utilize SaaS intermediaries that settle fiat payments behind the scenes. Until the network severs its reliance on internal treasury subsidies, Hedera's unparalleled architectural throughput will remain decoupled from the market value of the token itself.
Yep, there you go. So bottom line, don't buy HBAR. We should probably add it to that list of chains that's likely to, go the way of the dinosaur over the next couple of years here. So I label this grade A Fugazi. This is like, that Japanese Wagyu, that prime cut. Yeah, this is some prime Fugazi right here. Yeah. So let's take a look. Yep.
So the Prove AI that I looked up that left Casper Network to go over to Hedera to build out their AI. It says, in short, they've essentially launched a control plane for generative AI, a set of tools that help CTOs and AI engineers treat AI systems with the same rigor as traditional software by providing deep visibility and a blockchain-backed audit trail. So really, I mean, even if they do pull this off, like there is no token for that, and it really has no correlation to the HBAR token. So,
yeah, so many teams have built so many scams, and they hide behind, pretty flowery language, talking about partnerships, insert Fortune 500 company name here. Insert buzzwords here and here. And then, it turns out that where's the product? There's no product. It's vapor. So yeah, I think, man, that's a shame. But let's take a look at Monero. So when we talk about something with a real use case, it seems as though it has some product market fit. However, just think about this as we're going through this Monero piece of research. If you can become confidential on, let's say Ethereum, right? If there is a privacy layer on Ethereum where you can selectively disclose information or none at all, if there is on a Bitcoin layer 2, completely private transactions denominated in Satoshis, well, then what is the real use case for Monero? I'm sure that there probably will be. It seems as though this chain is focused only on creating the most decentralized and truly private, blockchain coin possible. Looks like they've achieved that. Let's learn about Monero.
In 2026, the global financial landscape tightened its grip on digital assets. The rollout of IRS Form 1099-DA mandated sweeping cost basis tracking across brokers and wallets, removing the pseudonymity users once relied on. Public ledgers began enforcing state-level compliance directly at the protocol level. Stablecoin issuers actively executed freezing orders, with Tether alone locking up hundreds of millions of dollars across Tron and Ethereum addresses in the first half of the year. This regulatory pressure triggered a systemic purge of privacy-preserving assets. By 2025, to comply with strict local travel rules, 73 compliance-sensitive exchanges, including major venues like Binance, completely removed Monero spot trading pairs. Institutional off-ramps were systematically severed. In January 2026, the Dubai Financial Services Authority formally prohibited authorized firms within the DIFC from trading, marketing, or packaging any anonymity-focused tokens. Yet this aggressive exclusion...
Now you got to ask yourself why. Why would these regulatory bodies and governments not want people to be sovereign and confidential? Why would they want that?
Because they want us controlled.
And they want to steal.
Yeah.
From centralized trading platforms produced a highly counterintuitive market dynamic. By stripping away casual retail sellers, the available circulating supply became intensely concentrated among long-term, high-conviction holders. This chart shows the accelerating timeline of global exchange delistings plotted against Monero's spot price curve. Driven entirely by organic peer-to-peer demand and an escalating anonymity premium, the price squeezed upward, reaching an all-time high of $798 on January 14, 2026. Monero survived this coordinated exclusion because its resilience is not dependent on centralized market access. Its survival is the direct mathematical output of an uncompromising commodity-like tokenomic model and a hardened cryptographic architecture. Monero operates on a pure utility currency model. The protocol explicitly rejects modern tokenomic trends, avoiding programmatic burning mechanisms or token sinks designed to artificially restrict supply. Many contemporary networks utilize staking lockups and yield-bearing mechanics to drive value. These designs introduce economic friction, restricting the liquid velocity of money and discouraging real-world merchant adoption. Staking models also favor capital-dense holders. When voting power is tied to locked capital, large entities consolidate influence over protocol parameters, compromising the base layer's neutrality. Monero enforces equity through a transparent, predictable supply issuance. Upon completing its initial bootstrapping phase, the protocol programmatically shifted into its perpetual tail emission phase. This equation illustrates Monero's maximum supply model. The network issues a fixed reward of exactly 0.6 XMR per 2-minute block, ensuring the economic incentive to secure the network never drops to zero. While this technically makes the supply infinite, the actual inflation rate in 2026 sits around 0.85%.
So this is interesting because this is in direct contrast to Bitcoin's emission model, where miners earn half as much after each halving event, roughly every 4 years or so. In 6 years' time, we will have passed 2 more Bitcoin halving events. What is going to incentivize miners to keep their machines on when, in 6 years, the reward, the miner reward is going to be cut to like 0.7 BTC, something like that, from where it is now at 3 1/8 BTC.
Well, I mean that's why it's essential that the Bitcoin price go up. Is to mitigate that with earning less Bitcoin, it needs to be worth more to make it profitable to keep the machines on, to pay the power, to do all those things. Either the cost of mining has to come down, or the price of Bitcoin needs to go up, or there needs to be some other way put in place to where they can earn. There needs to be some kind of staking or some sort of native DeFi, something to make it
something to generate transaction volume on the layer one.
Yes,
I think that's the thing, and I think it's called covenants.
Yeah.
When accounting for natural coin loss due to hardware failures and unrecoverable keys, the circulating supply functions as practically deflationary. This predictable tokenomic baseline directly funds the network's security budget through its proof-of-work consensus layer. Monero secures this consensus using the RandomX algorithm. Instead of performing static mathematical hashing, RandomX requires miners to execute dynamic, randomized computer programs within a dedicated virtual machine. This specific computational requirement is efficient on general-purpose CPUs, but virtually impossible to optimize on specialized ASIC hardware. It enforces hardware egalitarianism, preventing industrial mining farms from monopolizing the hash rate. The combination of a perpetual tail emission and CPU mining parity establishes an uncapturable base layer resistant to capital and hardware centralization. This resilient base layer was severely stress-tested in mid-January 2026. Following a major external security breach, attackers attempted to obfuscate approximately $282 million in stolen Bitcoin and Litecoin by routing it directly into the Monero ecosystem. This sudden influx of volume put immense operational strain on network nodes and non-custodial swap providers, forcing instant exchange platforms to raise their finality requirements to a strict 30 confirmations. A transparent ledger facing this massive volume spike would experience severe congestion and permanently spiking base fees. Monero absorbed the shock without halting because the protocol operates without a hard-coded block size cap. This mathematical feedback loop balances transaction demand against block expansion. To prevent blockchain bloat, if a miner produces a block larger than the 100 block median, a programmatic deduction applies, and their base reward is mathematically slashed. During an immediate transaction spike, the median block size remains momentarily static. To compensate miners for accepting this penalty and including their transactions, users must pay elevated priority fees. The fee market behaves differently when high volume is sustained over several hours or days, as seen during the January exploit. As larger blocks are continuously mined, the 100 block median programmatically expands. This causes the threshold for the mathematical penalty to increase, allowing miners to process larger blocks without losing their base reward. The mempool backlog clears as the network establishes a new high-throughput, low-fee equilibrium. This entire scaling process occurs autonomously, requiring no human governance votes or network hard forks.
That's important.
Monero's dynamic scaling mathematically balances short-term anti-spam penalties with long-term throughput expansion, ensuring the network can absorb systemic capital shocks without paralysis. While the economic and scaling layers protect the network from operational shocks, long-term privacy requires constant cryptographic evolution. The legacy CLSAG ring signatures obscured inputs under standard conditions, but they carried a vulnerability to advancing long-term heuristic tracking. The core weakness of the legacy system was its strict mathematical limitation, a small fixed anonymity set size. This diagram illustrates the legacy ring CT data structure.
Just recently
it provided
updated
probabilistic plausible deniability by mixing one genuine transaction input with exactly 15 decoy outputs pulled from the blockchain. To combat increasingly sophisticated chain analysis, the developer community deployed a protocol upgrade to the stressnet in May 2026, Full Chain Membership Proofs, or FCMP++. This upgrade structurally abandons the concept of small, localized decoy rings. Instead, it utilizes zero-knowledge membership proofs to establish transaction confidentiality. By leveraging a powerful cryptographic accumulator known as curve trees, the network validates these inputs in a completely new way. This visual represents the FCMP++ architecture. The spender mathematically proves their input belongs to the set of every single unspent output across the entire history of the blockchain, expanding the anonymity set from 16 to over 150 million available outputs. This constitutes a greater than 9 million-fold expansion in the foundational privacy set. FCMP++ renders current heuristic analysis obsolete. By expanding the anonymity set 9 million times over, the protocol ensures that its privacy parameters keep pace with advancements in surveillance technology. When we examine the economic, scaling, and cryptographic layers together, the unified operational architecture of the 2026 network becomes clear. The structure builds from a foundational tier, a strict tokenomic base with a predictable tail emission. Above that, the operational tier, ASIC-resistant proof of work and dynamic block sizing absorb capital shocks. Finally, the application tier, full-chain zero-knowledge proofs guarantee untraceable finality. This stacked architecture explains the protocol's Q2 2026 baseline metrics. Despite facing institutional blacklisting and severe regulatory friction, the network sustains a multi-billion-dollar market capitalization. It maintains stable peer-to-peer transaction volume, a decentralized global hash rate, and absolute default on confidentiality for all users. By explicitly rejecting yield-bearing centralization and compromising zero ground on privacy primitives, Monero relies on math, not permission. It mathematically ensures its position as the definitive sovereign payment standard in a hyper-regulated global economy.
I like it. I really like Monero. And if we just take a look here, here's BTC. Let's just check in with good old Monero. But first, let's check in with Stretch. Ouch. Ouch. Ouch.
Yeah.
And MSTR, yuck. Okay. I just had to look. Oh my God, look at Micron plus 17% and SanDisk plus 20% today. Man, these chip makers are just printing.
Yeah, we just did deep dives on both of those before they pumped. Not to say that that's why they're pumping, or that we knew that they were going to pump, but we did deep dives and showed why why they people are investing in it. Why they are pumping.
Oh man, speaking of the anti-pumping, this is ADA
Oh,
Cardano.
dude.
I think it goes to zero.
I've been pointing out for probably like a year and a half, 2 years. I've been trying to warn people about Cardano forever and getting hate for it.
Yeah, just a real shame. Something that I'm kind of interested in is Akash, because you can use this to like rent out your hardware or basically lease GPU compute. It's got a lot of competition though.
Yeah.
And then if we take a look at Zcash, this is a direct competitor to Monero.
So that Akash is it falls under decentralized physical infrastructures. It's called DPIN. For those of you that haven't heard it, it was a big narrative. But like before, I think like Render is one of those, and there's a couple of projects out there that basically they utilize compute power that's like your home computer, your laptop, stuff like that, securely. Supposedly, it can use your compute power and to not have to rely so much on the production of new chips and things like that.
Yeah, it's a protocol that allows you to rent rent out your extra compute, or if you're looking to buy compute, you can do it on there too. So here's the competitor to Monero. This is Zcash. And, I know, right? So the big difference between Monero and Zcash is, one of them works and is decentralized, and the other one is not decentralized, and you have no idea what the supply is of it. So Zcash, I don't know if that pool exploit with that orchard pool, if that was ever resolved or settled. I don't think it was.
The end of July, they're supposed to be launching that fix to where basically they're going to, everyone's going to be able to migrate their tokens over, and it's going to reveal if, there's a bunch of people who, because there's only 21 million. So, basically people are going to be told to migrate this is my understanding. They're going to be told to migrate their stuff over. And then if there's people that aren't able to because 21 million have already been moved, then that means it got exploited. And a bunch of, basically, fraudulent Zcash got made.
So that's happening in July.
That's what I remember is it was like the end of July is when they were going to be or projecting to launch that.
So my thought process here is once Zcash breaks below its 200-day moving average at 378 or so, then I think it's just a straight shot back down to $40. Maybe even lower than that. Because if it turns out that the chain obviously was hacked and you have no idea what the supply is, then you can't value it. You're valuing it against trust me, bro. And that's not good enough. So let's take a look at XMR, which is on my shopping list. Now, the problem with XMR is this pattern. This is a head and shoulders pattern, pretty bearish here, trading at support. So the thing is sitting at support. And if support fails, then the first level, long-term level would be like at maybe 200 or so, the top of this channel that formed basically, during the last bear. And Monero stayed in this channel for years until the real start of the last bull cycle, and put in a nice rip. But head and shoulders pattern, neckline comes in at 292. So if that fails, yeah, man, I'm just thinking.
Looks like little Chinese ruse.
It does. So I like Monero. It made it onto my list here, and maybe move it up a little ways and move this one down a little ways, and something like that. I don't know, maybe like that. So that's what I got, Myke. You want to run through some socials here?
Yeah, let me pull that up. Let me share my screen real quick. Let's see. All right. So if you want to follow us on YouTube and and join the conversation, join the chat, we greatly appreciate the input, both positive and negative, in the chat. We are not like other channels. We want to hear everything that you have to say. We want to put out all the information, and the only thing I ask is throw all the insults you want, but at least throw a link or tell us where to find the information that proves us wrong. But if you'd like to come on over, it is at the Node Network, all one word, and you can see you have all of our different shows here that we have throughout the day, every day of the week. And if you want to come over here to our official website, this is where you can find everything. So this is the node.pro, and you can see that unlike other channels, again, we're all about knowledge here. We give away at no cost. We give away from beginner to advanced DeFi, crypto, TradFi education, DeFi University. It is a structured program. Each lesson builds on the last with checks on learning. There's videos, there's the audio files, so you can listen to it while you work or when you drive. It has, infographics. It has, if you're a visual learner, an audio learner, if you like, read to absorb information, whatever your mode of learning is, we have it here for you. So again, at no cost. Other channels charge thousands, if not tens of thousands of dollars for programs like this. We give it away. The Intel library. So this is our library of deep dives. We, all these deep dives that we do, two, every show, Monday through Friday, and the 3 shows that Jeff does on the blockchain report for early projects. They all go into the library here. You feel free. Again, I challenge you. If you think that we're full of shit, go through it. Take notes of what you think is wrong. Go do your research. You should always do this anyway. Do your research. Find actual documentation and factual information that proves we're wrong, and send it to me. Send it to David. We will make adjustments if you can prove us wrong. But you can see, everything that we've done is here. So, we're just working our way through the, kind of what we see as the best and the worst projects.
Did you see that bye-bye protocol?
I did. I started looking into it. It's being launched on Base, and it's super early project that I'm guessing Jeff put on here. I'm going to have to do some more research. Not super excited about it.
I was about to say, where did all the liquidity go? Did it go bye-bye?
Yeah, exactly. So,
your money went bye-bye?
Yeah, it's again,
horrible name.
Yeah. So again, no cost. We give you access to this. All you have to do is use it. It's on you. And again, do your own research, but great tools that is going to save you hours and hours and hours of time doing it yourself. The newsletter, David's still working on this, but you can use it at no cost. And it has a lot of really good information. It gives you news with links. It cites its sources. We practice what we preach here. It cites its sources in our Intel library. If you go through it and look at the source document that I post, it has all the cited sources in it. You can go and you can fact check us if you want. We practice what we preach here. But you have prices, you have trading ranges, you have liquidity pool ranges, all kinds of valuable information that you can get here. And the best part is you pick the assets that you're interested in. It's not built off the assets me or David want to do. You go through and you select right here. You select what assets, stocks, commodities, crypto, whatever that you're interested in, and generate your newsletter based off the assets you are interested in. I can't stress enough how powerful this is. And again, no cost. Once we fully launch it, it will be $20 a month, 66 cents a day roughly. Is an hour or two a day, worth your time? 66 cents. Is your time, an hour or two of your time worth more than 66 cents? I hope so. The community. Again, no cost Discord. Other channels charge for their Discord. Ours is no cost. Come in, meet the crew. You got Scotty D, you got me, you got Black Ice, you got David, you got Jeff. The whole crew's in there. Feel free to ask us questions. If you want to, do like a one-on-one with one of us, and talk about what you're doing with your portfolio. We're not financial advisors. We can't give financial advice, but we can give you our input. And what we might do. There is a premium channel in the Discord. If you want to join these calls on Monday, Wednesday, and Friday, these purple calls at 5 p.m. And what these calls are is David is leading the conversation, does a lesson, but myself and other people in the community are on those calls. And in those calls, they share different advanced strategies that they're doing, or opportunities that that they're either exploring or currently in, and if they're successful or not. So it's a great place to learn, find a mentor, maybe share a strategy that you're thinking about doing, and get input, from David in the community, and have them pick it apart, show you what, where the flaws might be. Same thing, that we're always talking about these deep dives. Feel free to pick apart our deep dives. We welcome it. We welcome opposing views here. We want them. It helps us learn. The store. If you just simply want to help support the channel and buy a t-shirt, a hoodie, a hat, we greatly appreciate it. Not required, but we appreciate it. Again, under Learn is DeFi University. programming. If you want to see all of our shows, like today, we got this show that you're watching right after this. Right now, blockchain report. Jeff's pre-recorded show is going live right now. The daily market wrap Monday through Friday with David, where he goes over kind of what's going on in the markets that day, a lot of technical analysis and charts. And then tonight we're doing our red pill show. It's usually where we pour ourselves some drinks, people smoke it if they got it, and we just talk about random topics. Tonight I'm actually kind of thinking about if I can get my brother Taylor on. I actually want to talk about the adventure company that we're starting.
That could be cool.
Yeah, and just not necessarily just to hype it because it's not going yet, but just talk about kind of how we came on the idea of starting this company, and what we plan on offering. So we're all about entrepreneurship here. Starting businesses, investing in real estate, just crypto, traditional finance, tokenized assets. We're all about making the money.
That's right.
So it's join us tonight. I think that we're going to talk about that tonight. And David is building out. Do you want to tell him a little bit about your little AI assistant? I should say little, but
sure. Oh yeah. So Runway. GetRunway.trade. If you want to bring it up, Mike, I can just talk people through it real quick because I actually built into it GetRunway.trade. So I built into it this morning. That's what I, basically from the moment that I woke up until just before the show, I was working on building a new feature set into it. So basically what it is it's a Hermes agent that you argue with, and it's a quant. Okay, so it's a quant Hermes agent that you argue with and you make your case about a trade. But I built into it this morning the ability to do exactly that, but for liquidity pools on Uniswap, V2, V3, V4, and the ability to actually enter and manage positions from Runway. So, it's all of those automated liquidity managers, think, like Crystal and Revert, VVAT, their moats are gone because these AI models are so good that as long as you can understand the architecture, you can build out tools that compete with them.
Well, so again, you got a free trial.
Yep. So this is something that you can try for a week, and it's right now I'm using it just to trade directionally on hyperliquids, and then the next step here is after I get that directional trading logic exactly where I want it, then the spread trading logic, the statistical arbitrage logic, and today I built the liquidity provision logic out. Well,
if you do the annual plan, it's you basically get 2 months for free, and then it shows here kind of the workflow, like the directional flow. So scan ideas or follow traders, talk with Hermes, journal the plan, autopilot executes the perp, and then learn from the close. And then on the stats arb flow, discover coin-integrated pairs, walk forward. What's that? DDS gate.
Yep. So it's a statistical term.
Okay. And then meta allocate the book, 2-leg spread execute, and then supervise and rebalance.
So a lot of this is meant to be hands-off. I built something in there called autopilot. Autopilot is pretty cool. And the next step with this is, I've got Hyperliquid in there. I got to finish the autopilot feature. I built in Uniswap V2, V3, V4 today. I want to build in some smart contracts there to automate some things for Uniswap liquidity provision. The next thing that I'm going to build in is Aave V4, Morpho Blue, and Euler V2 for lend borrow markets. And then also Pendle and Boros. So, and then also near intents so that you can get onto and off of from spot Bitcoin or from Monero if you want to. So yeah, this is pretty darn cool.
Awesome, dude. I'm super excited about this because somebody like me that isn't a professional trader, and I'm not a chart guy and have never claimed to be, and a lot of because I see a lot of opportunities. I just don't know how to analyze those opportunities to maximize my chances of success or mitigate the risks by sizing it properly. So something like this is going to be hugely valuable for people like me.
100%.
Because most of my investing is basically I'm just buying these projects that I see, that I'm bullish on long term, or like something like Aerodrome, where it's super simple for me to make, like 20%, yield on it or something like that. That's really where my focus has been. But I would love to be able to use something like this and, build out like a separate portfolio almost where I'm actively trading, or actively doing, DeFi strategies. So yeah, I mean, as soon as you get this to a point where you feel it's ready, I mean, let me know. I would love to give it a test run.
100%, man. And so, the end goal with this is that after you sign in, you land on a homepage that looks like, a chat box that we're all familiar with. And because it's connected, it's a liquidity manager. So you can connect your wallet and you could actually deploy from that chat box. So you could say, I'm taking a look at.
You did say that it's self custody or
Yes.
non-custodial.
Exactly right. Yeah. There's no custody. So what the end goal here is, let's say that you connect your wallet and you open a perps position on the Hyperliquid, let's say, and you're talking to the chatbot and you say, hey, you know what? Actually, I see this interesting liquidity pool that I want to enter over on Uniswap V4. You could tell the chatbot execute, basically go from the Hyperliquid layer 1 to the Uniswap V4 LP, and it would be able to execute that entire thing for you. And then maybe you decide, hey, you know what? I'm in this LP. I want to go ahead and enter this lend borrow position on Morpho. It could execute that for you too. So basically just like tying all of these liquidity layers together. That's the end goal. And right now it's just working on Hyperliquid, so it's been pretty useful. But I think that's all she wrote for today, Myke.
Awesome. I was just discussing the title companies with Taylor. So join us tonight. And actually, you know what? Whenever this is ready, we'll do an episode on it. We'll actually do like maybe not on the this show, but let's do like an actual let's do like a separate like special on it. I think it warrants that.
Oh yeah, no, it's going to be really, really cool. So it's almost there.
Well, and it will give us something to cut some shorts out of it and stuff too. So yeah. All right. Well, I appreciate you all for tuning in. We appreciate the support. We know right now this is the time to lock in. This is the time to educate yourself, find those projects that have good solid legs and position yourself properly. This is when you make money. It's not when the markets pump that the opportunity is gone. Once everything starts pumping, the life-changing opportunities have passed you by. This is the time that you position yourself for that. So with that, make sure you do your own research. Utilize the no-cost resources that we offer on the Node.pro and position yourself properly for what's coming. And until next time, Veteran Crypto out.
Peace.